All right, guys, happy May. Here is your market update about what is going on with interest rates and what we can expect really over the next probably few months and even summer. So for those of you who are tuning in for the first time, this is a look at the mortgage bond market. We look at mortgage bonds and the demand of investors buying mortgage bonds because that's what causes mortgage rates themselves to go up and down. And honestly, what we've seen basically since the start of April is a pretty steady movement in the rates. It's still always going to be somewhat up and down. It's like looking at a stock every day in the stock market. If you were to look at the Apple stock in the morning and in the afternoon, and you looked at them weeks in apart, the price of that stock is going to fluctuate a little bit. And that's basically what we've been seeing over really the last 25 to 30 days, which is good news. It's somewhat of stability in the market. What we weren't anticipating is, of course, in December, the Fed said, we think that we're going to lower the federal funds rate multiple times throughout the course of 2024. And here we are in May, and not only have they not done that, but the Feds met yesterday and said that they don't anticipate doing that. And if they do, it won't be until the end of 2024. So what does that mean for you if you're a buyer? What that means is interest rates are going to stay pretty steady. And so if you were thinking that rates were going to come down, or if you were waiting to buy until rates came down, they're likely not going to come down. But here's what I will tell you is that means that we should see pretty normalized pricing on home prices, because keep in mind, we do know 100% when rates start to come down, buyers are going to flood the marketplace. And we've still been in an inventory shortage since 2017. So if you remember, we come back here and we look at this chart, the blue lines are showing us the demand of real estate. The orange is the supply, meaning how many builders are building homes to keep up with the demand. We've been in a shortage since 2017. So if home buying gets more attractive, the demand is going to pick up, and it's going to really speed up the price of these homes. So certainly the price we pay today is going to be hands down cheaper than what we buy in, let's say, 2025. But the interest rate will be ugly. I mean, I say ugly right now, they're hovering above 7%. So keep in mind, y'all, here's where we are today. I wanted you to show it's pretty steady. We're expecting that. If you go to my website, themortgagenerd.com, you click on this view rates tab. Keep in mind that we're always going to supply a snapshot of where mortgage rates are. Now, this is a snapshot, meaning it takes into account an average. It includes some discount points. It includes 20% down and an 800 FICO score. So is this a rate quote? No, but it's taking the average across all the banks from coast to coast, west coast to east coast, and it's saying here's a pretty good idea of on average what rates are looking like with a little bit of added cost, 20% down and an 800 FICO score. But we post this every week so that you can follow along how rates are trending, and then you can read the commentary from the Freddie Mac chief economist. And then if you scroll down, there's some really cool additional videos. And then what most of you guys always ask about is this principal and interest chart, so you can get an idea of how just the principal and interest portion of your payment fluctuates when the rates fluctuate based on a loan side. This doesn't include taxes and insurance, of course, but it at least gives you an idea. So that's your market update. The good news is the Feds aren't increasing the federal funds rate, which we thought was a possibility because inflation is still high. We don't expect them to decrease the federal funds rate. So unless some crazy curveball comes out over the next few months, we should stay pretty steady, and we're probably going to stay in this 7% range. But y'all know, once you go under contract, that's when I start shopping rates for you. We shop 31 banks, big banks, small banks, and we show you behind the curtain, and we show you all your rate options. So if you have any questions, you know how to get a hold of me. Call me, email me, text me, send me a DM, whatever it is. I want to be your resource. Y'all take care. Until next month.